Welcome to the management audit of Amazing Cars. We are excited to review with you our strategic plan and highlight our performance in the last 5 years. We will discuss the strengths and areas of opportunities from the business decisions we've made and outline some of the industry changes that compelled us to refine our strategy. We'll end our discussion with our insights on the future of Amazing Cars. 5 years ago, we embarked on a roadmap built to strengthen our leadership in automotive excellence. Our vision is clear: to be the most trusted leader in our industry, admired not only for innovation, but for consistent high-performance execution. Our mission reinforces this commitment by reminding us why we exist: to design reliable, high-value vehicles that unite performance, safety, and style while empowering our dealers and delighting our customers. To deliver on this vision and mission, we've defined 5 strategic priorities that we collectively refer to as the Power of 10. First, we commit to drive profitable operational efficiency, targeting a 10% annual increase in profit margin. Second, we aspire to elevate customer trust and brand strength with the goal of increasing firm preference by 10 points. Third, we strive to accelerate innovation and product quality, achieving leadership in 10 ISSQ capabilities. Fourth, we aim to expand market presence strategically, growing market share by 10%. And finally, we are committed and motivated to develop talent and dealer capabilities, advancing satisfaction by 10% annually. Together, these priorities set our foundation for sustained leadership, stronger partnerships, and vehicles that truly define automotive excellence.
As of the end of year 5, performance has been favorable. Cumulative net income has increased by nearly a factor of 10. We are the industry leader in several key performance indicators. Our stock price is 1.7 times that of the next firm. Total shareholder return is an excellent 19.7%, and earnings per share is $1.47. Firm A has the highest sales revenue of over $20 billion, the highest market value share at 27.3%, and the highest market value of $17.5 million. Firm A has the second highest firm preference among surveyed customers at 24.4%, and is the only firm whose customer preference has not dropped at any time. Return on equity, return on assets, and debt-to-equity ratio indicate healthy financial performance. A review of decisions thus far provides insight into our past areas of strong performance and opportunities for improvement in the future. Early development of new models, including entering into import and export agreements, has translated into high market share. We have taken our target markets and microsegments into account when planning attribute improvements and marketing themes to ensure that our products align with what is important to our customers. Expansion into the West region, which has been historically underserved, has yielded Firm A the highest sales per dealer in that region. When sales in year 1 were flagging, we provided more resources for dealer training so that they could better educate customers about recent vehicle upgrades. Investor confidence improved with increased dividends indicated by our high stock price. We have identified some areas of improvement during our journey. In year 1, we were overly cautious with upgrades and marketing expenditure, which constrained our growth trajectory. After year 1, we took a more holistic approach, which has improved performance across the board. We have a higher cost of goods sold than our competitors. However, we are in the middle of the pack in cost of goods sold percentage. One misstep was not moving more quickly to improve our safety metrics after new regulatory requirements were introduced, which resulted in fines. Moving forward, we will be more proactive in accelerating improvements when required. Finally, after being static with retiring short-term debt, we have placed greater emphasis on consistently making payments to offset interest rate hikes.
Hello everyone, my name is Lynette Medina, and now we will take a moment to talk about environmental and competitive changes. First, industry demand grew faster than expected, especially in premium consumer groups like achievers and enterprisers. Even with inflation and rising material costs, buyers continued to spend, which pushed demand above our earlier forecast. Second, several firms expanded their development centers. This wasn't anticipated, and it means competitors will likely accelerate model launches in upcoming periods. That increases pressure on us to stay ahead, especially in AEV and premium markets. We also saw stronger than expected export demand, which boosted sales for Alabord and Aura. This helped diversify revenue, but also signals that competitors may pursue export agreements as well. Another unexpected shift was that firms began importing vehicles to quickly enter new segments, particularly the luxury class. This raised competition earlier than the model development timeline suggested. Overall, these changes created a more competitive environment than we originally projected, influencing several of our strategic adjustments moving forward. Now, we are going to take a shift to talk about future changes. Now let's take a look at future potential changes we'll take in the upcoming decision periods. One of the biggest adjustments is continuing to lean into the premium and luxury markets. Importing luxury vehicles proved immediately profitable, so we'll keep using that strategy while evaluating if launching our own luxury model makes sense long term. We're also sticking with cost reduction efforts after success we saw with Alpha. Improving margins on our highest selling model had a major impact on the overall net income, and we plan to continue prioritizing production costs. Next, we'll increase support for the AEV project. No competitors have entered the AEV segment yet, so we wanted to secure first mover advantage before the industry shifts. On the marketing side, we'll strengthen our focus on enterprisers and achievers, since these groups continue to grow and respond well to premium features and styling. We'll also refine our production levels to reduce unnecessary inventory while keeping up with rising demand, and we'll look into expanding our export agreements to stabilize revenue across markets. Altogether, these changes position us to stay ahead of competitors while reinforcing our long-term growth strategy.
Our future plan is simple but powerful. We will amplify the strategy that built our market leadership. The Power of 10 is our commitment to strengthen what already makes Amazing Cars exceptional: profitable operations, trusted relationships, bold innovation, strategic expansion, and empowered people. These pillars are not new, they are the foundation of our success. But the future demands more. We will push deeper, execute faster, and invest smarter. Together, we will deliver vehicles for every customer segment. Currently, we have a car for 80% of customer segments. Over the next 2 years, we will grow our product lines to cover all customer segments. We will also bring dealers closer to every community. We will focus on expanding our dealer network in South and West, more specifically, while sustaining our leadership in North and East. We'll also build a global ecosystem of advantage, making import and export plans that make most business sense. Lastly, we will generate a cash flow that rewards our investors and fuels our ambition. We will act on cost reduction across our operations, including the development of our leading products like ALEC and Alpha. Together, as we strengthen the pillars that built our leadership, we are not just preparing for the future, we are shaping it.